Hello, Arkansas, and welcome to this week's edition of Arkansas Money Talk, brought to you by the team of Retire Path Wealth. I'm your host, Kristen Oakley, and joining me in the studio, we have the President of Wealth Management, Dale Cole-Clazier, and we have co-founder Mark Smalling. The title of today's show is Investing Fear During an Election Year. If what's going on in our country right now has you concerned, you are not going to want to miss what Dale and Mark have to share with us today. Gentlemen, it's great to be back with you. This is such a juicy subject. Are you excited?
Oh, yeah, absolutely.
We've been hearing a little bit about this around the office.
We
live in the South, so you get every conspiracy theory in the world that comes through. So.
Yes, for sure. But we need to talk about it because folks are concerned. People are talking about it. So that's why we wanted to do an entire episode dedicated to this very important subject today. The reality is that 2024 is an election year, and with that can come a lot of fear, a lot of uncertainty, especially for folks knowing what to do with their money, because a lot of people are making some drastic decisions based on what they think is going to happen with the election. And so we're going to be talking about that today and what that could potentially mean for you and your financial plan. But first, if you are concerned, we want you to know that you're not alone. This seems to happen every 4 years, right? I know we've all been through in this industry through various presidential election cycles. But according to a recent survey by the Nationwide Retirement Institute, almost half of investors believe that the 2024 election will have a bigger impact on their portfolios than market performance. I found that to be very interesting. 32% of investors believe the economy will plunge into a recession within 12 months if the political party they least align with gains power. And then whether someone is a Republican, Democrat, or independent, they believe that the outcome of a presidential election will have a direct and lasting impact on the performance of the stock market. We got to unpack all of this today, but let me first ask, because I know you said you've been hearing about this a lot in your office.
Oh, sure.
Are folks expressing fears and concerns when they're coming in a meeting with you?
Yeah, and it enhances when politics get involved because let's all face it, it gets nastier and nastier as we kind of move forward.
Towards an election is what you mean.
That is correct.
Yes. And not in your office. Not in your office. What's going on out there?
And it just simply causes uncertainty in many cases. The one thing I will point out, Kristen, and it's what we urge every single week, the greatest thing that I know to do to put in place to add surety and to help offset those fears, because guys, fears is a natural part of living life on a daily basis.
Right.
But when you have a plan in place that you know what your outcome probabilities look like, you know what your rate of return parameters need to be, it can help calm all of those things down.
Right.
Because in so many thought processes and processes that are used outside, and then if someone's simply using an investment broker, so many times the whole conversation about the investment world is just simply, what return did we make this last year? And it just goes so much deeper than that.
For sure.
Well, and it's the fear, and fear is one of the worst things to make investment decisions over is, fear and greed.
Right, those fear-based decisions,
but, so when we see people, they make knee-jerk reactions and move things, and those don't usually work out in your favor.
Right. Yeah.
Well, and it's interesting to note because fear sells, right? And when you turn on the news, right, it's almost like they're trying to get people riled up. It's important to remember that political pundits, when they're talking about financial things, they're trying to make political points. They're not giving you individualized, personalized financial advice. And it's important to realize that, because I think that's what can cause people to make those knee-jerk, fear-based financial decisions.
One of the greatest pieces of advice that I ever received in this business from another advisor that was, a much tenured individual whenever I got started, was he said, Dale, 90% of decisions people make are based on fear and greed. They're the two worst things that you can use to create your decision based off of. Your job as a independent advisor is to help remove as much fear and greed as you can from that so that people can make the best decisions for themselves, whether that's logic-based or sense-based or whatever.
Right, yeah. Well, it's interesting because studies have shown that people make financial decisions, not only just based on fear and greed, but on their political party affiliation. So we wanted to share some of this data with you because I think it's really, really fascinating. This was from a study called Political Climate, Optimism, and Investment Decisions by the Social Science Research Network. And the study found that when Democrats are in power, Democrats as a whole are more optimistic and they therefore invest more aggressively. Whereas Republicans are a little more pessimistic during those times, so they don't invest as much. Well, the study also found the opposite is true, that when a Republican is in power, Republicans feel more confident, they feel more optimistic, they invest more money. So as a whole, it's interesting, folks are earning more of a return if their political candidate is in power, only because they're investing
actually
more
investing.
money,
Investing,
right?
yeah.
Talk about that. That's really interesting.
Well, again, it gives them a sense of security, against of wellness, that someone that they agree with is making similar decisions, so they're more confident.
Right.
Again, I'll go back to the idea of having a good solid plan in place, because now you're going to always align with positive outcomes, regardless to whether they're red or blue, whether your party isn't in favor at that particular time. Now, we don't want to make light of the fact that policy does drive long-term outcomes and taxation and all of those kind of things.
Especially with the economy, yeah, for sure.
Right. But the reality we know is tax brackets are going to adjust and fluctuate just like markets are going to adjust and fluctuate. And if we've taken into consideration those things in advance over a 20, 30, 40-year time frame, we know they're going to occur. We know how to make our adjustments between those two. And so we can have the ability to make better decisions and not those knee-jerk decisions that cause me to have that particular negative outcome.
Right.
Yeah, if we can kind of take the investor behavior out of it, stick to a plan that's going to work no matter what the economic environment is, and then we don't have to worry about who's in power, you know, from one administration to the next. We've got a plan that's going to work regardless of what the economic situation is.
Right, and that's what can really help folks navigate this fear and uncertainty with confidence, is just going, I have a plan, I know it's going to work no matter what's going on out there. You know, one of my mentors that first said to me, one of the first presidential elections I got to witness being in the financial services industry was in 2016. And we used to always say that money is neither red nor blue, it's green. And that's what that study shows, that being invested is what made the difference, right? It didn't have anything to do with who's in power, but obviously if you're investing more, you have the opportunity to earn more, versus some folks saying, oh, if so-and-so wins, I'm just going to pull out all my money and go to cash. So if someone's watching today and they are feeling this trepidation and maybe they're going, you know what, I would like to have a solid plan in place regardless of what happens later this year, what would you want to say to that individual?
Well, if you're having those concerns about the upcoming elections and you're not sure whether or not your plan is adequate to meet the changing environments, because whether it's this election or the next one or what happens in the market next year, we don't know. But you need to have a good, solid plan. We'd recommend you come in, have a visit with us, and let us actually develop a written income plan that's going to help you navigate any of those troubling waters.
Wonderful. Mark Dale, I'm excited to continue this important conversation with you. For our viewers at home, if you would like the peace of mind that can come from having a solid financial plan in place, as Mark and Dale have shared, so that you will know what happens with your money and where you can be confident that you're making good decisions, not based in fear, regardless of what's happening out there in our world today, we encourage you to pick up the phone and call 866-724-3893. Again, this is for no cost, no charge, no obligation. It's simply an invitation to have a conversation to see how Dale and Mark and the team of Retire Path Wealth can help and serve you. Or if you'd rather not talk to someone right now, but you do have your smartphone handy, if you simply pull it out, open up that camera app, you can point, click, and scan that QR code that you see there down in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few short, simple questions, and then a member of the team from Retire Path Wealth will reach out to connect with you to schedule your complimentary visit that way as well. Don't go anywhere. When we come back, we're going to be sharing some more data and research that demonstrates how you can prevent political uncertainty from derailing your investment portfolio. Stay with us.
I didn't start out in Medicare. Medicare is something that came along later in my career. I started with Northwestern Mutual as a college intern back in the early 90s. And I was with Northwestern Mutual as an advisor for about 12 years. And then I actually went out on my own after that. And it was actually when I joined another firm that needed somebody to get into Medicare, because Medicare was going through a lot of changes. That's when I got into the Medicare business. And I became an intern at Northwestern Mutual through a college job fair day. and that there was the advisor for Northwestern Mutual out of Little Rock. The district manager came over with his recruiting specialist, and that's how I ended up as an investment advisor at Northwestern Mutual. So that's how I got into the game. The thing that I enjoy most about my career is being able to help people on a daily basis. I mean, to literally see people come in the office that are scared and there's a lot of trepidation about what do I do and where do I go from here, and having them leave with that weight lifted off of their shoulders. Making sure that everyone that comes in to our office leaves feeling like they've received something of value from us.
Welcome back to Arkansas Money Talk, brought to you by the team of Retire Path Wealth. I'm your host, Kristen Oakley, here with both Dale Colclaser and Mark Smalling. Today's episode is all about this being an election year. We're calling this Investing Fear During an Election Year. We know there's a lot of worry and concern about what may or may not happen with the upcoming presidential election, and that can really cause folks, as we've established, to make some fear-based, emotionally driven decisions that can be really detrimental to their long-term financial plan, and that's what we're trying to help you avoid. We want to share some data and some research that shows the importance of staying the course with your investments. And the following comes from a study that was put together by Invesco prior to the 2020 presidential election. It was called 10 Truths No Matter Who Wins. One of the truths that this study shared was that the markets have performed well under both parties. So we have a chart that we're going to put up here for you to take a look at, and I'm excited for you guys to walk us through what we're looking at here.
Yeah, the reality is it doesn't really matter as much as what party's in power or who the president may be, as to what market performance is. Because, Kristen, one thing I learned a long time ago, the fact of the matter is if people want to buy stocks, the prices go up. When people don't want to buy stocks or any other asset class, the prices go down.
Right.
And that's simply the truth of how that market
demand,
actually,
right?
supply-demand model that we know that we work with.
Right.
And so that's the greatest criteria to that. The other side is to be cognizant of what's going on. And that's one of the reasons that we follow a certain, what I'll call a prudent investment approach, where we have certain assets where we know they're going to perform in a certain way regardless to what economic conditions are. And then we can make adjustments outside of that with our other assets based on not necessarily what political winds say, but then what the market itself performance is and what it appears to be moving forward. Because again, the idea that political outcomes probably have more of a effect on the market years down the road than they do actually today anyway.
That could be a whole other conversation, right? Yeah, for sure. Well, what that chart was really showing is that neither party can lay claim to having some superior economic or financial market
That's
performance,
absolutely correct.
right?
Yeah.
Well, moving on, one of the other 10 truths highlighted in this study was that the markets don't care if you don't like who's president. So let's take a look at this chart. And Mark, I'd love for you to walk us through this one here.
Yeah, so this chart actually shows the growth of $10,000 in the Dow Jones Industrial Average since 1896. So one line shows that what your $10,000 would have grown to if you were only invested when we had a Republican president.
Yeah, so that red line
That's
there
the
at the very
line,
bottom, right? Yep.
The other line shows what your $10,000 would have grown to if you were only invested when we had a Democratic president.
So again, that blue line, which
That
is
blue
kind of
line,
very close to that red line
very
there.
Very close to the red line.
Right.
But then take a look at the $10,000 that was invested during that same period of time. But if it had been invested the entire time, regardless of who was president, so you can imagine the growth people missed out on if they only invested while their party was in power.
Yeah, look at that difference.
It's a huge difference.
It's a huge difference. So again, those other two lines are showing what would have happened if someone had jumped in or jumped out of the stock market based on who was president versus if you had just stayed invested the entire time, look how much better off you would be.
Better. Yeah.
Right?
Yeah.
It's so important when you can see it that way and go, huh, right?
That's right.
It makes a difference. Well, but yet, despite that data and despite us knowing that to be true, you know, I still hear, and I'm sure you have as well, sometimes people say, oh man, I'm just gonna go to cash. You know, depending on who wins or doesn't win this election, I'm just taking all my money out of the stock market. But it's so important to not let our emotions get the best of us, as we've been talking about throughout today's episode. It's important to understand that market timing just doesn't work. The jumping in and jumping out of the stock market. So I know we have another chart we're gonna show here, and I'd love for you to walk us through what we're looking at.
Okay, that's right. It says, no one can guess what the best days and the worst days in the market are. The stock market often grows in short, dramatic spurts, which we're all aware of because that's the volatility that typically scares most people. And this is why you've got to remain invested through the whole time because you never know when that spurt is going to come. If you're not there the whole time, you might miss it. Those who have overreacted to market events by moving to cash have often seen their portfolios underperform the markets long term. Long periods outside of the market can make those matters even worse. That's why it's so important to maintain a long-term focus. Kristen, again, I'll just touch the idea back again of having a plan in place, that if we know what our plan tells us our outcomes need to be, because our investments are structured based on an outcome to, or a portfolio to outcome basis, as simply to, gosh, let me make as much money as I possibly can.
Right.
It can give a lot better sense of security to those individuals of saying, hey, I'm performing within the parameters of what my objectives are. And if I literally cannot sleep and I need to make some adjustments, as long as I'm staying in these parameters, then maybe that's okay.
Right, right. And if we can put that chart back up one more time, I just want to highlight particular two columns next to each other. So here's what's interesting. If you had missed, if you look at that second column there from the left, if you had missed just the 10 best market performing days during this period from January 2003 through December 2022, you would have only earned just shy of 30 grand. But look at the left. If you had been invested the entire time, look at how that money has over doubled. That's the key, is sometimes the best market performing days are right on the heels of some of the worst market performing days. So when people are making these fear-based decisions and they're jumping out of the market, they're missing the upswing, and it only takes a matter of missing, a few key important days, and then that's it, you've missed it.
Right.
Yeah.
So can't afford to do that.
You can't afford to do that.
Yeah. Well, when folks are coming in and meeting with you for the first time and they are expressing these types of concerns, what are those conversations looking like? And how are you able to help folks navigate this fear and uncertainty?
Well,
that
the
they're
reality
experiencing?
of being honest about those instances can help us determine what type of investment structure is most appropriate for someone. So there are options that are out there that can help offer protection against downsides. The investment world has become very creative in the last 15 years with 0% interest rates, where there are a lot of investment opportunities out there available that are outside of bank and insurance products that where some protection can be put in place where we still have good upside opportunities. So when we have people that come in that either voice fear to do to the market and go, I just can't bring myself to do this, the idea is, well, if I can show you where we can add some protection layer, but you still have the ability to receive these above average rates of return potential to where you don't have to concern yourself with your greatest fear. But let's minimize it some of that amount, and then by positioning things in certain asset classes, again, modern portfolio theory in its theory works, okay, is by having assets in different asset classes that are going to work differently together, we can help add some surety to that outcome.
Right. And so the important thing, I think, too, is we're not trying to say, again, that this election isn't important. It's important for so many different areas of our well-being and our country, for sure. But for folks to work themselves into a tizzy and be stressed from a financial perspective, that can be mitigated and it can be eliminated with having that solid plan in place.
Right. It's about managing people's risk and how they feel about that. And if you're in a situation today where you feel like things may head south later this year after the election, and you're uncertain about the plans that you have in place, we just recommend you schedule a time to come in, meet with us. Let us talk through some of these issues with you and discover a better path for you guys.
Well, the other reality I just want to touch with before we step away from that is if people are having a sense of unsurety in their investment structure, my guess is because they don't know why they're invested the way they are.
Good point. And it's not just knowing what to do, it's knowing the why behind it.
That's exactly right.
I think of the story you shared of a woman who came in recently who called into the television show and set up a time to come in to meet with you. And once she understood the philosophy, she understood the why behind you were building the plan, it just made sense to her. And she was like, how can we get started?
Yeah, because so many times people will come in and go, oh, just do what you do for yourself. It's like, no.
Right. I'm not you.
That's right.
Right?
We're
like
in a completely different situation. We need to find something that matches, again, your fear, because fear is real.
Right. Yeah. For sure.
But reality is also real. So we need to find a good balance between those.
Absolutely. Well, Dale and Mark, thank you for your perspective on this. And again, if you're at home and you are feeling that fear, that worry, that concern, the team of Retire Path Wealth would love to help and serve you. So for no cost, no charge, no obligation, the invitation is for you to call in and schedule a time to come in and receive your very own complimentary written income plan from the team of Retire Path Wealth. That number to call is 866-724-3893. Or again, you're also welcome to scan that QR code and that will get connected as well. When we come back, I'm going to put Dale and Mark on the spot and ask the number one question that I'm sure is at the top of everyone's minds, which is how should I be investing my money this year during an election year? Stay with us to find out.
I became a financial advisor through a referral from my financial advisor. I was leaving a career in the corporate world and basically was looking for something else to do. And he said, hey, don't you have a finance degree that maybe you can put to good use? I went to college, was supposed to be a dentist. And physics and organic chemistry changed that path. I think it was the realization of of having worked somewhere long enough to know that I didn't want to have to work for someone else, that I was looking for more entrepreneurial career path, and the opportunity for financial planning offered that, to where I could basically have my own practice at that time. Started one of the biggest financial planning firms out there. There was a lot of positives learned from there, but also learned a lot of things that didn't really line up with my sense of belief, and knew that there were others out there that probably felt exactly the same way. So even though I learned a lot about the industry, I also began to learn that a lot of financial advisors are taught the industry by the vendors and wholesalers themselves, and came to the understanding that a lot of what we consider to be general consensus advice is really based on those techniques that are benefiting those that are teaching, not necessarily those that are investing in those products.
Well, welcome back to Arkansas Money Talk, where we are having a lively discussion today on investing fear during an election year. My gosh, I wish you could have been here for the break. We had a great conversation about this next question that we are going to be posing. I promised I was going to put you guys on the spot because I know that this is on the top of everyone's minds. Folks want to know, how do I invest my money during an election year? And of course, this is a very individualized thing.
Sure.
But where do you want to take the answer to this question, and what would you like to share with our viewers about it?
Well, the reality of it is you need to be invested where you need to be invested. Mm-hmm. And that's going to be based on the premise of what returns you need to achieve based on what your plan says, because based on your goals, your assets, your belief. Mm-hmm. The phone rings all the time. We get these questions coming out there. Hey, with interest rates here and with this doing that, what do you think about certain assets?
Mm-hmm. And some of those questions involve what?
Oh, well, one of the questions we're getting a lot right now is, what about gold? Mm-hmm. And I'd ask Dale all the time, I said, well, what do you think about gold, Dale?
It's pretty, but you can't eat it. It doesn't generate a dividend, so there's no income that produces off of it. Mm-hmm. Sometimes it's hard to trade, it's hard to barter with. Mm-hmm. The reality of it is I know it's up in value. So there's a very good reason it may be part of some people's individual portfolios. There's one reason that it is a product that we offer to our clients on an outside. We don't believe in owning it in particular accounts, but owning it is in the hard asset itself. Because if your real purpose for buying gold is to have something of real tangible value, shouldn't you be able to hold it in your hands and own it yourself?
Right.
And so, again, so I'll just go ahead and throw that one out there. If that's something that you're looking for, we do have avenues to be able to accomplish that. The reality is we should be invested the way is most appropriate for us. Yep. At certain times, there may be reasons to be more conservative. But again, does the plan and does the data that you've presented, do the feelings that you have about the way things work, does all that fit into that we still have a successful outcome? The last thing in the world we want people to do is make knee-jerk reactions because of the fact that I can't sleep at night.
Right,
I tell clients all the time, hey, I sleep well every night. I want you to get there also.
Yes, yeah.
Money's a tool. It has to work for us. It shouldn't be something that's causing additional anxiety in our life. And again, just the fact that the media has to talk 24 hours a day, 7 days a week, and have something to discuss, to stir up action in whatever realm they're looking for, shouldn't be a reason to derail your positive financial outcome.
Right.
Well, we get asked all the time if the market's fluctuating a lot, are we getting a bunch of calls about the market? And the reality is we don't, because if you educate your clients and they know what's going to happen when certain situations happen, they don't have the concerns because we do have a plan.
Yes.
And this is what we're going to do when this happens. And Dale lays that out from the get-go. This is what we're going to do. It's not a surprise.
Right.
They know why we're doing what we're doing.
Yes.
Yeah,
and
when
run
you know the
stress
why.
tests, if you will, right? So
That's
that
right.
if worst case scenario happens, you know how the plan's going to be adjusted and changed to account for that.
Right, and we try to run things in advance and to prepare people.
Right.
These are the things that we're looking out for. These are the things we're going to see a massive change. And if we see this massive change, then we need to make adjustments.
Right, right.
But again, it's not wholesale changes just because, XYZ happened. Oh, CPI came out and it was an awful number. Well, we see the market adjust one day. Typically, it rebounds the next, and we move forward. We believe the market runs in trends, and as long as we're in an upward trend, we want to participate.
Right, for sure. Well, gosh, with only about a minute and a half left in the show, this has been such a jam-packed episode with so many different directions that could be taken. But really, if you had to sum up this whole conversation to help people have their minds be put at ease about investing fear during an election year, what do you want to leave folks with today? The
one thing I want to leave everybody with today is Mark and I built this firm based on a lot of the stuff we're talking about today. The lack of information, the lack of education. So many times people come in and I ask them, why are you doing what you're doing? And he goes, well, they told me to. That's awful reason. It may have worked out, but as we know and we've discussed many times before, when we're in the accumulation phase, investing's easy. I just got to keep putting money in and I got to need it to work out. But when I make that transition to where I'm no longer and my employer's no longer contributing, I need to have a good solid plan in place because those assets now have to become income as well, not just accumulation. But I still need them to either maintain or to grow to pass them on. And so I want to give people the ability to have a sense of surety to come in and meet with us so that we can put a good solid plan in place so that you have the ability to sleep at night.
Wonderful. Dale, Mark, thank you so much. That's what it's all about. We want you to sleep well at night. Thank you so much for joining us for this important conversation. We look forward to being back with you next time on Arkansas Money Talk.